Thank you so much, Walter. Joe, thank you so much for joining us at main stage at Startup Impact Summit. And I'm actually here accompanied with somebody we both know very well, Kenneth. Kenneth, do you want to, start
I would
us
love
off?
to. Hi, Joe. How are you? So nice to see
Hi,
you
Kenneth.
again. Hello.
Yeah.
Well, again, today we're talking about China VC landscape and the new normal, how impact startups can lead the pack. To the right of me, it's Karena Belin, co-founder of WHub and AngelHub, one of Asia's, if not largest, but definitely most active startup community. And of course, the founder of this amazing Startup Impact Summit, which focuses on United Nations and the 17 Sustainable Development Goals. See, that was fast. With Mr. Tian, though, where do you begin? I mean, president and founding partner of Detong Capital, I mean, named to the Forbes China Midas list from 2008 to 2019. I mean, how many times do you think?
10 times?
Wow, you read your notes.
I read the
10
bio.
times. Highly regarded China's top 10 venture capitalists. Invested in Chipscreen, Amski, Hopu, Chinese All, High Tech, Kanghui, China Mingyang, Suntech Power, shall I go on? All listed. Personally, though, Tian is a spiritual leader of the Wharton and Penn community, and we thank you for your wonderful leadership. When Hong Kong's chief executive, Ms. Carrie Lam, actually opened this summit and said, let's empower the startup community with passionate and experienced leaders, Joe's name immediately came to mind. So I'm very grateful to be here today with both Karena and Joe as an introduction. Without further ado, actually, Karena, I will hand over to you and take care of Joe. And Joe, thank you so much again for doing this. Have a wonderful panel.
Thank you so much. Thank you, Kenneth, for that brilliant introduction. And yeah, Joe, once again, welcome. Actually, before we dive into the topic about the landscape, the VC landscape in China, and also how impact startups are thriving, I was just wondering if you could tell us about your story. How do you become one of the, or even the most successful VC in China? You have an amazing background. Tell us a little bit more about your path.
Sure. Thanks, Karina. My career path, I grew up in China. Then I went to Wharton to get my MBA. And then I changed my career because my previous background is computer science related, engineering related. Then after Wharton, I worked for McKinsey in the US doing the consulting. Then I went to work for the Wall Street banks, including Merrill Lynch and JP Morgan. Since year 2000, I thought it's time for me to do something for myself. So I partnered with my long-term partner. Actually, today we're still partners for 20 years, doing the VC investment, venture capital investment during the past 20 years. So this is a very simple career.
Wow, that was at that time probably still even more risk-taking than now, right? Tell us a little bit about the VC landscape back then, and how did you see it evolve, and how did you actually impact this evolution?
Sure. Back in 20 years ago, that's the year 2000, China VC industry is quite young, actually at the infant stage. And our model, business model at that time, it pretty much is a Me Too model. What that means is we learn from US peers. You know, if they have, for example, if they have Google, then we create something Chinese version of Google, namely Baidu. If we have some other unique business model from US, we create something similar. So that's a very initial stage, our business model. But over the past 20 years, time flies. Now, actually, China industry, when I look at a number, in terms of AUM under management, is almost similar to our US peers, you know, back in the Silicon Valley or the US. So what that means is over the 20 years, really China VC industry grows so rapidly. And from our very simple Me Too model, business model, now we actually very diversified business model, and we invest in different business segments, which probably sometimes similar, but sometimes different from the US business model.
Very interesting. And I actually also had the chance to have a fireside chat with Edith, where we were comparing Silicon Valley or US trends versus China, and just talking about, evolving from a me too to actually leading really, for example, in the fintech space. We just thought about, if you just take the fintech unicorns in the US and in China, the average valuation is 10 times bigger of a Chinese fintech unicorn than of a US fintech unicorn. And I think it's even still 3 times bigger if you pull out the outlier and financials, right? Now tell us a little bit more about your portfolio companies at Detong Capital and your investment thesis.
Sure. We have been investing 3 areas or 3 themes, if you like. One is the TMT, telecom, medium telecommunication. One is healthcare. One is hardware. Along those 3 fronts, actually, we have different investment targets we are focusing on. For example, for the healthcare, probably particular under today's environment, given the pandemic, all this, situation. China, in this particular verticals, we call sometimes the vertical in the diagnostic, in terms of new drug discovery. Actually, a lot of resources, a lot of capital has been putting into that. So hopefully we can get a new drug discovered as early as we would like to. And also we get some new diagnostic methodologies or equipment ready, then we can really contribute not only to China market, but to the entire society. So just use an example, even under today's pandemic situation, we still have a lot of interesting areas. We think there's a huge potential for the years to come. So to sum up, the 3 areas, TMT, healthcare, and hardware, those are 3 fronts we're really focusing on.
Yes, and probably a lot of synergies between them, right?
Yes.
What stage are you focusing on? I think you're relatively early stage, though I would argue in China the speed of scaling is tremendous.
Yes, we mainly focus on early stage because to get a successful investment company at early stage, that need your professional judgment and professional capability, and also your expertise in certain of the verticals, including the 3 areas I'm talking about. Again, use the healthcare example. If you don't have the team with the medical experience or the future healthcare industry experience, it's very hard for you to identify the opportunities. Also, even the opportunity comes, you cannot make the final judgment. So those are the things you really need a lot of years of experience and a very strong team to finally first capture or identify the opportunity. Second, to negotiate or to do the deal. Last not least, after your investment, you help them to grow eventually to the stage either IPO or the M&A, the successful exit. So those are the things we have been focusing on. But the bottom line is you have to know that what you're doing very well, and you have a very clear forward-looking view about the certain industry, the future.
Right, and you have, as you mentioned, a long-lasting experience now. Give us a little bit of an idea. Is that cycle from the time you come on board until the company's exit, is that really decreasing? So is the speed of scaling significantly increasing now?
Oh yes, absolutely. Particularly for certain consumer-related industry players. Give you an example. I mentioned that we are investing in the TMT related. TMT mainly in the consumer sector. We invest in the company helping the drivers. As you know, China now is the largest auto market in the world, surpassed the US a couple of years ago. So for those drivers, actually, those are the white collar, young generation. When they buy the gas, they want to get some savings, hopefully 5-10%. So what we did was we linked up, use a virtual network, linked up the entire China's gas stations. We help those users, the drivers, when they purchase the gas, they will have the discount. And who is paying for that? It's the insurance company, also the bank, the credit card companies, etc. They're willing to pay for that because by doing this, they feel they are connected to the end users, and these end users are the high quality end users because at least they own a car, as you can imagine. So those are the things is that you understand the China market and you find the benefit for the end users, but meanwhile you create a value for all the partners you're working with, namely for this case, the banks, insurance companies, credit card operators, etc. Eventually, the gas station will also benefit out of it because you will tell them how many users will going to purchase the gas station from the gas from your gas station. So it will help them to prepare ahead through the big data. They know how much volume they're expecting for this month or this week. So those kind of technology-enabled startups really grow up so rapidly. So that's just an example for the portfolio companies we have been created and how the companies grow so rapidly. It's really a win-win for all the parties involved.
Yeah, and I think that's something really, really interesting and characteristic for a couple of great success cases in China, right? That there is not necessarily direct monetization, right? I think probably one of the examples that's very well known outside of China is about, WeChat, Tencent, with, distributing red pockets and not even monetizing the red pockets directly themselves, right? But really through the generation of data and creating value for the ecosystem players that are involved. Impressive. I think I want to shift a little bit the conversation now to the topic about impact startups, right?
Yeah.
So looking into how do you define impact startups also for your investment thesis? Do you apply certain frameworks? We talked about, the 17 UN SDG, which we're highlighting here during the conference, or the concept of B Corps, of benefit corporations, or how do you define for yourself impact startups?
Yes, I think you mentioned the 17 UN SDG or B Corps, etc. Those are very good guidelines for our team. For us, the first and probably the most important thing when we work with a startup, when we finance a startup, is that they are really creating some value for the entire society. Obviously, they are subsequently they will create value for this company as well. Because again, in China, for past 20 years, one thing is that we always follow the trend. First of all, we foresee the trend, what's going to happen in China. For example, when the 4G comes, 10 years ago, then we foresee that the 4G will create a new business model, create new business opportunities. So we're actively looking for and invested in the 4G related. Now, time fast forward, now it's 5G. It will be the same, or in a way, it will be more opportunity. But in terms of what kind of startup will coming out, it will be different. But when we look at the impact, we're looking for exactly the same because there's new entrepreneurs, including serial entrepreneurs, under the 5G, there's new opportunities scenario. They will continue to create something really valuable to society, then subsequently valuable to the business itself. Then we can leverage all this value created to help the company grow as much faster as we could. So those kind of impact we really looking for. And obviously, 17 UNG and B Corp, etc. Those are kind of integrated into the investment cases we have been building upon. So for all that, we continue to see that more and more companies, they are doing this value creation for all the parties, for all the partners and the society, everyone. So those kind of things we see, they will be sustainability and can last for a long, long time, because for all the company, once get it listed, IPO, it will have a long way to go. So we hope the company we invested in, it will have such kind of a sustainability and continuous growth over the years to come.
That's very, very interesting. And particular now, again, focusing and zooming in on China, do you think that you have a particular stance on impact investing, or do you think that this as a segment starts to build up to trend? So do you feel you're unique in positioning as an impact investor, or you have more and more of your colleagues riding on this trend?
Yes. Give you another case. which is, as you may know, that last year, since last July, we called a star market in Shanghai Stock Exchange. For past now almost 1 year now, we have a couple hundred companies listed on the star market. It's kind of a Chinese version of Nasdaq. It's registration only. It's not approval, and in terms of profit and all the other requirement is much lower and is similar to the U.S. The Nasdaq current standard. The case in point is that the first one ever listed in the new drug business, it's called Chip Screen. Actually, Kenneth mentioned the company. I was sitting on the board of that. That company is a very typical value added or impact investment, because the company has been around for almost 18 years, 18. It's really because it's discovering the new drug by a new methodology. I don't want to bore everyone with the details, but basically it's use a chip type of screening method. That's what we call the chip screen, to identify what's a potential new small molecular drugs can be explored. Then after that, it'll focus on, or it'll zoom in to the next step. So this kind of new methodology, first of all, it's cost effective. Second, it will, with this methodology, it will have a long pipeline for new drugs you can continue to discover. They already discovered one of the new drug, and they have a patent for both, not only in China, but in the worldwide. US FDA also approved. So those kind of impact investment, I think it's really something we're quite proud of, because they're not only creating these new drugs for China market, but really they're creating for the entire world. And we're licensing this out to the other countries already, including US and Japan and Europe, etc. So those kind of investment target that we continue to looking for. And looking forward, we think that more and more startup will have this global view, but meanwhile, it have a very solid technology expertise and resources. And hopefully with our capital, we can help them to move up to next level as quickly as we could.
Yeah, absolutely. And thank you, Joe, because you're also already, bridging a little bit over to this question in terms of, return, right? Or moral versus money, or return versus charity. So sometimes still, we feel we have a hard time to explain that, impact investing is not giving to charity, right? It's an investment, and it's a real, valid and valuable investment source that sometimes can even, deliver even better returns. If you can maybe give some color to the panel and explain in terms of, your experience.
Sure. We manage both US dollar fund and RMB fund, the local currency fund. The US dollar fund, actually, a lot of times it's a pension and they have the endowment, etc. Obviously, they are really looking for the returns. But meanwhile, we have a lot of constraints, a lot of things we do not make investment. For example, liquor-related, drug-related, certain illegal drug-related, and all those kind of things, or tobacco, actually. So those are the things that we actually follow very strict standard, Western standard. For the RMB investors, because we manage the RMB fund as well, actually quite sizable in terms of US dollar term. Actually, it's about $2 billion US dollar equivalent to RMB. But this fund we manage, actually, a lot of investors actually represent different government entities. For example, local government, what they call is a guidance fund, because they want to pass on the capital to us. We make investment. Then this investment, first of all, is good for society. Second, it may be sometimes good for the region. Give you in a case in point, certain times in the west part of China, unlike Beijing or Shanghai or Shenzhen, actually certain technologies may not be to the level of the more developed areas, or compared to US, it really still have a long way to go. But through our investment, we create a value, we create a bridge by linking our startup, eventually grow to hopefully a unicorn. They will help to create more value to this region, namely Western region, or some regions more underdeveloped. But those areas, they have their own strength. For example, they have much cheaper resources, including the electricity or other resources needed, or their cost of the staff, the HR, human resources, much more efficient. So those are the things we continue to do. Hopefully, it's a creative value for all the parties involved.
Yeah, for sure. I think I know we're nearly at the end of the panel, unfortunately already, but there's one thing again I wanted to just question. So do you feel that by now, sometimes there is this understanding that impact startups are still undervalued because VCs, different from you, do not really see the potential? Do you still feel that you have a competitive advantage, or do you think that this is by now already normalized?
Yeah, I think there are a lot of us. First of all, there are so many startups that continue to come up. Also, when you look at a startup, actually, you are really looking at the founders, because the most important asset for any of the startup, those are founders. The human, the people. So when we look at those people, actually, we're looking for their key strengths or attributes. Namely, they really need to have a responsible, responsibility for the entire society, and they need to be responsible for whatever the business they're looking for and working on. Actually, they need to be responsible for their customers. They're responsible for their employees and the shareholder, etc. So those are the very basic attributes that the founder need to have. But after that, actually, we really looking for those startup really exploring some new technology, new areas to be creative, and so eventually they make this market more efficient. They have the ultimate benefit for all the end consumers, for all the society, for all these, after they get public listed IPO, they will continue to add the value or to create a value to all the shareholders. So those are the startup. I think they're more and more emerging, and we are very excited that along the way we'll be looking for more opportunity to work with those with the startups.
Yeah, that's great. And actually, I can see there is a question coming up from the audience, actually, I guess from an impact startup that is wondering to enter the China market. There's a little bit, if I would summarize the question, about rather going with a CVC or, a VC, or instead of CVC, there was this question about, joining bigger tech giants to become part of their ecosystem straight away versus looking more for traditional venture capital. Is there kind of like yes, no, black, white type of recommendation you could give to that startup?
Yes, that's a very good observation. As a matter of fact, for the VC, right now there are two types of mainly there are two types of VCs. One is the financial institutions, the VC, like my firm, the DD Capital. Others is a strategic VC, namely, all this, like a Tencent, Alibaba, etc. If you look at for the past 5 years, they have been very active and very aggressive in the investment space. That actually become one of their growth engine. Look at that, some numbers. So there's a pros and cons to accept which part of the capital. By accepting theirs, then you, for example, if you accept the capital from Tencent, automatically you will be probably the, in a way, become the, I wouldn't say it's an enemy, but it's something really you will have difficulty by dealing with their potential competitor, whoever their competitors are. But if you partnered with us, like our firm or some other firms like us, actually there are more than 10,000 according to some statistics. But as a matter of fact, probably active ones, probably a couple of hundred. But by partnering with those couple of hundred active third-party VC firms, probably you have at a certain time more flexibility. What that means is when you could grow to a certain stage, then maybe you can reach out to be really get to closely tied with certain strategic investor. But before that, probably you have more flexibility and you have more options. And by doing so, you can even work closely with some foreign strategic investors. But again, if you just first day you are partnered with the major strategic investor, and then you probably lose all the flexibility and options. So there are really pros and cons. But those strategic investors sometimes can add value to extra add value, except beyond the financial, the capital. So those are the pros and cons you need to take into consideration.
Right. That's great. And that was actually the source of the question with regards to control and flexibility. I'm actually really sad that we have to break it up here because we have the next session already lined up. But Joe Tian from Detong Capital, thank you so much for being with us here today on the main stage of Startup Impact Summit SIS, and all the best. And I'm looking forward to following up in a few months back and hear more about some of your amazing success cases in your portfolio. Thank you so much, Joe.
Thank you. Thank you.
Thank you.
And Karena, thank you very much for hosting that panel. That was a great conversation, and that set us up very nicely for the next conversation. We're going to be looking at global social good and the future of impact philanthropy. We have Kenneth Kwok joining us on stage, hopefully where Karena had been a moment ago. And then we've got a great panel ready to unpack this really important subject. I like the comment that impact investing is not a charitable giveaway. It's very much an investment to help drive organizations forward. So what I'd like to do is, while we're waiting for Kenneth to join the stage, if we can have our panelists come on board and perhaps introduce themselves, we can then get this next conversation started.